Hey traders, checking in on the stock market today. Another bounce followed through day, some more flow state in day trading for me, and we have the bull setup that they wanted to see. I'll go over why that is psychologically. Now the question is our bottom in? All right, we got lots to talk about. So, had a bull lean yesterday due to the falling wedges developing on the daily time frame. They have now broken bull. So, I'm going to remove those lines because they're no longer in play for me at this point in time. And we can see a significant move off of the lows 2 days ago. How significantly things shift in just 2 days' time. So we'll talk about the FOMC reaction. Honestly, I didn't listen to a word Powell said and was still able to trade. Blocked out the noise and played off the charts. Before I get into that, put out a video on our YouTube channel, NIO trade reviews from this morning. And it's just copying the live stream that I did where I went bearish and then bullish. So I'm not going to talk about those trades, but that started the day off on a really good note as far as just picking up right where I left off yesterday with flow state and feeling really in the zone. And again, just one more message about flow state and waiting for your edge. Because for me personally, the last month, it's just been 2-day maker, 2-day loser, 2-day maker, 2-day loser, just puttering around, nothing really going on. And the last 2 days, I now have a 3.5 week maker because I waited for things to align. I waited for myself to get confident looking for a bounce. And you look back at this chart and say, well, what about the other bounces? I just didn't have confidence during those setups, but things just aligned with the current situation, notably because of the falling wedges. And again, I've gotten a lot better trading wedges, both bullish and bearish, over the last couple of years, but that allowed me to size up my positions. And so it makes up for a month of nothing going on in my account over the last 2 days. And with my mindset, I don't even know where to start. We want to talk bigger picture, the FOMC reaction. So we'll start small. Let's start with the FOMC reaction, and then we'll zoom out big picture from there. So the FOMC reaction heading in, I knew what I wanted to see. And again, I'm not trying to predict what's going to happen, but I lay out, this is what I want to see. And if we start checking off the boxes, this is happening, this is happening, this is happening, I have the game plan known of what I want to do. And that's when I can use more size because the trade comes to me exactly as I want it, exactly how I've laid it out in my brain. And someone asked me earlier, am I visualizing? I talk about visualizing a lot in Twitter recently. Am I visualizing what I want to happen actually playing out? And the answer is to a certain degree. I'm not putting a whole lot of time into it. When I'm visualizing big stuff, big life stuff, I'm in a hot tub and I am meditating and I'm in the zone and I'm putting all my intention into that. But on something like this, I'm picturing it in my brain. I picture the chart doing the thing I want it to in my brain. And that's about it. It's fairly quick. But it does, the image of what's happening does get put in there as far as what I want to happen. So the setup, looking at Twitter, heading into the day, this is from yesterday? No, this is from first thing this morning. If I am a bull, I want a bearish initial reaction to the FOMC. This has to do with the psychology of the market and putting myself in the mindset of both the bulls and the bears. I'll explain it in this video. So then heading into the FOMC, best case for market bulls, in my opinion, is a bearish FOMC reaction. All the rest of today, make bears confident the daily lower highs are set and fresh lows are coming. Squeeze them with the futures 4-hour higher low and higher high, bounce continuation into the weekend. So we didn't get the ideal scenario. What I wanted, ideally, was bearish reaction, all FOMC, all after the FOMC, into the close. And I wanted the bears to marinate on it overnight and to just think of how right they are. And then the futures chart to trap them with a continuation move. We got the next best thing. We got second best case scenario, which is a bearish reaction. Bears get confident. Daily lower highs are being set. And then we squeeze them. Anybody that went short today is now underwater. And their buying pressure helped fuel the end of the day bull move. So the 4-hour time frame was an inverse head and shoulders. We'll go to the 2-hour just to make it a bit more clear because it happened fast. Again, happened a bit more fast than I wanted it to ideally, but I'm not complaining. And the inverse head and shoulders was better on the NASDAQ. Again, falling wedge bull break on the NASDAQ, but the 4-hour time frame had a double top. So it was just picture perfect clear where we rejected from resistance here with a double top. We came down and set the higher low. And then we confirmed an inverse head and shoulders as far as I'm concerned. and looking at it on the 2-hour time frame. So again, it's not much of a right shoulder forming. It pulled back to a higher low and then saw continuation. And so what's the psychology of what's going on there? So I'm imagining, why I was looking for this is because I just imagine a scenario, okay, we bounced for 2 days. The bulls showed us strength this morning on higher opens, gap up opens. That's different. There are multiple things that are different this time around from the last couple of weeks. The first is, look at the NASDAQ hourly. Look at the hourly RSI. We looked at it in the video yesterday, but we have rejected from 70 5 times in a row. Yesterday, we rejected from 70 into the close, and then overnight, we got continuation. Instantly, that needs to flash in your brain. Something's different than the last few weeks of how it's played out. The last 3 weeks, something is different. Okay, so now we get a gap up open. And we know that normally gap up opens have been for selling consistently. The bears have done very well selling gap up opens. But this was a gap up for buying, and we got nice bull follow through on the morning. Granted, we gave it back with profit taking into the FOMC, but it was different because bears did not own the morning on a gap up. So that's 2 things in the last 2 days that are different than the last 3 weeks. So in my opinion, it would have been too easy. The market is not an easy place. It would have been way too easy for 2 days of bulls going straight up into the FOMC and then a bearish FOMC reaction to set a daily lower high, and then we drop to lower lows. Because I know that that is what all bears are looking for. Maybe not all bears, but most bears are looking, okay, we're running up into the FOMC. It's going to be a sell the news reaction. We're going to set the daily lower highs. This is it. This is a great bearish entry opportunity. And that's what the market wants you to think, to trick you. So we get that, and we get enough follow through on the FOMC initial reaction to make bears think that they're smart and they're right and they're getting it. Okay, that's our daily lower high. I'm in my swing position. We're heading down to test the fear lows. And then very quickly, we turn around and say, nope, you're underwater. Thanks for the buying pressure. We're heading higher. And so that is the psychology of what happened on the FOMC reaction. So from here, bigger picture, we know the bulls have a lot of proving to do. And with that, I have so many trades to go over. I'm trading so actively the last 2 days. I was fortunate enough to nail the bottom again while live streaming. And just real quick to go over this, how did I know to nail the bottom? Again, wasn't listening to Powell at all, but I bought, we'll go to QQQ. I bought TQQQ 20 cents off its low. And the reason was, I know I'm looking for this trap for the bears. And look at the 1 minute candles. It was just very clear reaction. Stair step on the 1 minute down, weak little bounce, stair step on the 1 minute down with a lower high every candle, little bounce, stair step down, little bounce. There are no fake outs. It's a higher low every 1 minute candle. It's a lower high every 1 minute candle. And then I see these wicks. Okay, we hit a low. We hit a new low of the day with zero follow through with a lower wick. We hold the low of the day with a lower wick. All right, good enough. I'm in. Make my bull entry. We get a little bit of follow through. I sell half. And now I'm risk-free. And if the scenario that I wanted to come to me plays out, I just nailed the bottom. And so it worked out really well. I sold my TQQQ position into the end of the day because I'm swinging Facebook and Tesla. I talked about my Tesla swing trade in yesterday's video. And Facebook, I bought the 5 minute bull flag. Again, I was just very confident in the bulls the second we started that bounce, or once we got some solid bounce follow through. So I bought this 5 minute bull flag on Facebook at 199.11. I just stuck my stop right under that low. I said, that's either our 5 minute high or low, or I want out. Because if it's a 5 minute bull flag, then I'm going to continue being right as far as this is the scenario that I'm foreseeing potentially shaping up. So if it's a 5 minute bull flag on QQQ and on Facebook, then it's going to be a good entry. And on the daily time frame, I know I'm scouting Facebook for a falling wedge. And we broke the daily lower highs on Facebook. So I entered 199.11. I sold half in the 202s. And I've now got a break-even swing position in the 196s. So my game plan, bigger picture with the swing positions that I have, I'm thinking more than just a little short-term move. And I am willing to give back some of the profits I've made in the last 2 days. Because again, I look at this S&P 500 chart and I know two things. Number one, SPY needs to confirm a daily trend change. That has not happened yet. Well, The futures broke to a lower low. SPY didn't. You could make the argument SPY just set a higher low, higher high. I need it on the futures chart, and I'm going to be using only the futures chart for the next week because SPY issues dividend quad witching on Friday and then QQQ on Monday, and that artificially adjusts the price. And if you are a technical analyst and you use these charts, you know that that gets frustrating when that happens. So I'm using the futures charts, and we did drop to a lower low here with no follow through. So what I need to see is whenever we top out, I want the bulls to get as much follow through as possible, and then we must confirm the daily trend change because we've seen bounces bigger than this. This was a bigger bounce, this was a bigger bounce, and we puttered out from there. So keep this bounce going as long as possible, ideally the next 2 days, but that would be a bit greedy. Won't hold my breath for that. Be nice if we got it. But once we top out, we must confirm the daily trend change. But bigger picture, why I'm holding these swing positions is because, again, I look at this 2-month time frame on the S&P 500. This can be a bull flag. Rates, yields, inflation, war. This is a bull flag. It's possible it fails and we drop to lower lows. I'm absolutely going to plan for that scenario. But there is nothing on this chart telling me right now that this cannot be a bull flag to new all-time highs. So I am going to position myself to stop out, break even, or small losses, or have big wins in bullish positions if this is a 2-month bull flag that sees a new all-time high later this year. And again, I know that sounds crazy with the backdrop, but I also know that the market is more bearish, aside from the CVID bottom or the dump, it's more bearish than I've ever seen it. And I wasn't trading in 2008, but aside from CVID, this is the most bearish I've ever seen the market. And it's a 2-month bull flag. So that is my mindset. And I will happily be wrong and stop out of these swing positions if I'm wrong. But I'm either going to nail the Tesla weekly high or low here with my entry at, I forget, what was it? 760s? No, maybe a little higher. Did I sell half? I don't even remember that Tesla trade. I've taken so many trades in the last 2 days. Whatever it is, I'm comfortably profitable and I sold enough. Again, I always sell that partial position. So my break even is so much lower. If I'm in a Facebook position right now and my break even's 199, I'm not nearly as comfortable with my break even 196. And obviously that just means my position is smaller, but I want it to be smaller because I'm looking for a weekly oversold bounce in Facebook. And I want to hold this position I want to see a monthly bounce. I want to hold this position for another 20% to the upside at least. We'll see if we get it. That's a long road ahead. But I have never established significant swing positions in the stock market aside from SPY at the CVID lows or on the way down. And that worked out really well. So this is enough fear for me to establish swing positions. Maybe they'll work out and I'll have big wins. If not, again, it's always the opposing side. If I'm wrong, it doesn't mean much. I'm not risking much at all because of the day trading that I do on these positions to set up the swing position. So I will stop out of Tesla if 756 breaks. I will stop out of Facebook if, what do I want to use for my stop here? I guess 190. That's risking 3% from my break even. That's fine. Stop under that low. And we'll see. I will ideally try and hold these for multiple months, but that remains to be seen. SMH was our lead bear on the way down comparative to QQQ, and it's now bouncing much more significantly. The move on NVDA has been very significant. And again, we just look at this chart and say, okay, anybody that's been bearish, the semiconductors, for the last week and a half is now underwater. The weekly bounce is underway. And we know we're in weekly downtrends on a lot of time frames as well, or a lot of sectors and ETFs. Again, I don't want my bull positions to allude to myself being really confident that we're going to hit all-time highs or really confident that our bottom is set. This is the most confident I've been in the last few weeks. But again, I'm completely well aware that this may just be another bounce that drops to a lower low. And so I will position for that as well. If I'm holding these swing positions, I will be actively entering bearish. For example, tomorrow, I hope these Chinese names gap up and I'm scouting bearish first thing tomorrow. So on a daily basis, it makes me more aggressive as a bear to scout positions to protect my bullish swing positions. But SMH Weekly time frame, anything under 290.35 is just a lower high. Again, wherever this move tops out, we must confirm the daily trend change. So now we're watching how long can the bulls maintain an hourly uptrend? How much pressure can be put on bears? Is this going to be a V-shaped squeeze? We would probably need some kind of news catalyst. And I mean, what better time over the next few days to get some kind of ceasefire agreement in Ukraine and Russia? That would just be rocket fuel as far as accelerating the move that's been taking place the last 2 days. Again, who knows? I have no idea. I have no idea what is going to happen over the next month, but I am positioning myself in low risk, high reward scenarios to benefit if a certain something takes place. 270.86 key resistance on SMH and NVDA, all about 246.65. We're right there, but it's a daily trend change. That is a higher low and higher high. The weekly bounce is underway on NVDA. Again, look at the 2-month time frame for NVDA. There's just nothing wrong with that chart whatsoever. The monthly, there's nothing wrong with it. We can absolutely set a monthly lower high next bounce. And if we confirm a monthly downtrend, then there's definitely something wrong. But look at monthly EMA 12 holding every period of consolidation for the last couple years and still doing so. And Tesla's 2-month time frame is why I want a long-term position. It's an uptrend. We can absolutely bounce instead of 2-month lower high, but you get the idea. So hourly uptrend is our guide from here for the next couple of days. If we lose the hourly uptrend tomorrow, my probability needle is going to shift. And that will be notable to me that this bounce only lasted 2 days before it topped out. If I'm going to be looking at this and saying, I think our bottom is in for the foreseeable future, I need, it has to be green tomorrow, and ideally Thursday and Friday. Because if you put up 2 green days from here, again, you put a lot of pressure on the bears. Tesla bulls must break the daily lower highs. If we do not break 861, nothing changes. We've had great bounces on the way down, but they all keep forming these lower highs. So again, I have these glasses, not literally, but I put on my bull glasses and I establish my trade positions. Now I'm in those positions, bull glasses are off, bear glasses are on. And I'm going to be looking bearish if we do not break 861. Maybe I'll short Tesla in a different account to offset my swing position. Constantly looking from both lenses to try and prevent from bias. You can have a bias, but you definitely want to be looking at it from all sides. XLV, inverse head and shoulders on a 2-day time frame, confirmed. 134.46 still has to break. But again, if you get over 134.46, anybody that has been bearish, this sector in the last 2 months is underwater. So XLV is leading the way as far as the bulls are concerned in this major sector. I forget what the percents are now, they've changed, but it's probably the 3rd largest holding in the S&P 500, probably to the tune of maybe 12%. It's probably 11 to 14%, something like that. So it's very notable. Look at the 2-month chart. It's just so strong. We'll see. Plenty of space for a daily high or low next time we top out. Hourly uptrend is our short-term guide. XLF 2-day time frame for clarity. Nice bounce. We're just looking for a lower high, but we've got space now. When we top out, we must form the higher low and higher high. So that still remains to be seen. But the hourly uptrend is our short-term guide. Next resistance after 38.49 is 39.20. IWM needs to get over 201.76, which we did just barely. 205.30, 209.05. Again, XLV is showing the way. And if IWM can clear 209.05, then anybody that's been bearish the last 2 months in the growth sector is then underwater. And for a while, this was our weakest sector. And its 2-month time frame does not look nearly as strong as many other names. But it's a weekly equilibrium, and it's going to try and break bull. I'm viewing this as a low, high, double bottom, lower high, higher low. We're getting real tight. And Bitcoin's the same thing. Bitcoin's just a tightening equilibrium and volatility is coming sometime within the next few weeks for both of these names. Higher risk, higher reward. Generally what you see is when there's fear market wide, you see the leaders. You know, if there's fear in Apple and Amazon, you're not going to see people buying high risk, high reward stuff. But if you see confidence, confidence is contagious, just like fear is contagious. So if we do see confidence from here, and if people start to believe, hey, maybe we're putting in a bottom for a foreseeable amount of time, then you see it trickle out into other places. And we look for laggards when that takes place. So keeping an eye on the cannabis sector to potentially be a laggard bull sector if the broader market can continue to prove to us strength. Again, it's only 2 days. And I know in this video I'm coming off real bullish, but I'm still skeptical of these bulls. They've done everything that I've asked them to the last 2 days. Great. But I'm still asking for more. Biotech sector, still a falling wedge. This would be in the laggard category as far as has not broken bull yet. Still range bound. Anything under 89.03 keeps the bears in control. So have to break bull to change anything. Right now, the biotech sector is not changing anything on this daily trend. And again, I pointed out on the NASDAQ a couple things. This is different. This is different than the last few weeks. I can't look at this XBI chart and say anything's different. So the burden is still on the bulls. MSOS, I grabbed an initial starter position today. And the only reason I did so is exactly what I just said. Looking for it to potentially be a laggard move. Looking for confidence to potentially eventually seep out. But also just knowing that I've got a really nice profit cushion in the last 2 weeks. And just the mindset. Okay, if this were to be a fear low. And let's just say I've got a 35% conviction right now that our fear low is in and we're about to bounce for months. Let's just say let's go 33. That's where I'm at. It's a small enough risk to be worth an attempt for me to risk a small amount of profits from the last 2 days to try and establish a longer term position. Again, I look at this monthly time frame. The cannabis sector is just so absolutely crushed. I know there's a catalyst in November. I know that the sector will respond bullish with the media attention and the votes that are coming in November. So again, just trying little low risk attempts to establish a position for that. It's still way too early in the sense that it's 8 months away, but made an attempt. Entered at 1880 or whatever, stops under the low. If it stops me out, it'll be a small loss. And I'm perfectly fine continuing to make small risk attempts in this sector because I know that when the time is right and when there is the spark and the fuel and the FOMO and the herd, that I could have 15 small stop outs and the profit that I will make when it is the time will easily offset that. I'm going to make a ton of money in this sector. You look at this chart, you must think I'm crazy. As a bull, I am going to make a ton of money in the USMJ sector. It's just not ready yet, but it will be, and there will be FOMO, and it will go nuts. Money will pour in. Just need the right catalyst, and we don't have it yet. And it might be in 2 years. It might be in 4 years. I don't know when it will be, but you better believe I am going to smash it. Solar sector, daily higher low set at 67.07, and resistance is 77.81. Anything under that is a lower high. We were cautious of the head and shoulders potentially shaping up, but a great 2-day bounce. And if we get over that high, we will very quickly not care about a potential head and shoulders. So solid 2 days here and all about that high of 77.81. CCJ, daily higher low trying to form. Big shout out again. You know, Red Devil has been holding it down in our chat room, just being the uranium expert with a couple other people, but this was another one where I was not paying attention to this name at all today, and I have friends in the chat room with eyes on it to feed me information. And so we get the headline today about an earthquake in Japan. Hope everybody's okay there. Haven't looked into it yet. Got to double check and make sure, but I don't think a tsunami happened. There was a tsunami warning. And so this uranium name sold off massively. Look at this drop of 8%. Is that 8%? 7%? 8% drop. Because of an earthquake that might have a tsunami. And it's just the market having PTSD remembering Fukushima. What is the probability? I mean, does this company even have anything to do with Japan? I don't think so. I don't even know, but I don't think so. So I look at this reaction and, someone posted, I think it was AM in the chat room, posted CCJ dumping on this news. And so that told me, that's irrational. That does not make sense. Number one, I think it's a low probability a tsunami's coming. Number two, it's an even lower probability that a tsunami would damage something nuclear and have negative headlines. Number three, this company has nothing to do with it. So I'm looking to play this bounce. And so I jump on, I look at this chart. At that point in time, we were basing out here. And I made a bottom fish play off of 24. And I was too early. No, it wasn't there. It was down here. I was too early. I saw this 1 minute bounce. And I knew I'm looking for the bounce real soon. So I saw this 1 minute bounce. I said, all right, I'll bottom fish 24 psychological. And I stop out. 10-cent loss. Didn't give up. 10-cent loss meant nothing. In terms of the amount of risk that I took, that's a quarter day loser. And I was already up well more than that on the day. So what that does by keeping that risk real small, I'll give it another attempt. Absolutely. And so then I saw this 1 minute volume climax. And so I market bought and got filled at 23.63 because of that, solely because of that 1 minute candle. Well, the backdrop that I just told you, plus the 1 minute volume, plus knowing the 5 minute RSI is crushed. And then we never changed the 1 minute trend on this bounce, and we bounced 4%. So I just took my gains. I exit half, I exited all. I did try and short it here for 1 minute consolidation. There was a 24.51 little double top. Saw the 1 minute bull flag, stopped out break even on my short. And in hindsight, had I held my long position, it would have been a real nice win because we did get a lot of bounce follow through from there, but it was a solid win. But again, just an example of trading being a team game, because if I'm trading by myself, I don't make that money. And I missed that trade and I missed that opportunity, but someone else had eyes on it. All they had to do was write a sentence. And then it kicks into gear. Okay, I know exactly what I'm doing from here. Oil trying to bounce on the daily, still not doing anything. Inside bar, 4-hour EMA 12 with another rejection. It's our third time. We're testing the low of 93.53. Have to hold 93.53 and break 99.22, where the bears keep complete control. Again, the top is in for oil for the foreseeable future. And in my opinion, if we're going to see a new high, we need to do something like this. And it's going to take a while. But every leg down that we see from here increases probabilities that that is the top for a long time. I mean, how often do you see that kind of volume climax and pullback result in a higher high? The answer is not often. And gold is trying to daily bounce. It's more significant. Follow through needed, 4-hour trend change needed. The weekly time frame is not as ugly as oil, but it's a double top at all-time highs, and we're just looking for a daily lower high to be the result of this bounce. The VIX weekly equilibrium is one to be watching. We were scouting a daily lower high on our whiteboard yesterday, and now we got the weekly equilibrium. This is going to be key for me. I don't often look at the VIX, but if you give me a clear pattern, I'll pay attention to it. Weekly lower high set, and now we scout a weekly higher low compared to 1993. And so how this breaks is going to be very key for me heading into the middle of the year. Well, heading into Q2. And the Chinese names, the bottom's in, unless there is massive bear news, surprise out of left field, which is always a possibility. But talk about big risk, big reward. That's the way the market works. The highest risk names will give you the highest reward. The market loves to go from maximum FOMO to maximum fear and maximum fear to maximum FOMO as fast as possible. That's another reason why in this high fear environment that the S&P 500 is currently in, I'm establishing long positions for the possibility that the switch was just flipped and we're now going to head to FOMO mode. It's possible. I've seen it happen too many times to not give myself some exposure if that were to happen. But BABA, I mean, the amount of volume that we're seeing here and the amount of a move that would be required for a lower low, the bottom's in for now. It's just a question of, can we confirm a daily trend change once we top out? What's the retracement size look like? Can we confirm the daily trend change? But you look at the volume on every time frame, The month is half over and we're approaching record volume. The weekly time frame, the volume is through the roof, 60% on the week. It's a climax. That is a volume climax in every sense of the word. Tons of space for an hourly high or low. 5-minute back burner. 5-minute back burner marked the hourly high or low, and the bulls controlled the entirety of the day from there. And that resulted in, what is that, a 20% move? Maybe a little bit more. And that tells you strength. Again, the strongest uptrends are when 5-minute marks hourly high or lows, 5-minute oversold. When hourly oversold marks daily high or lows. And we saw that with Baba and a bunch of other Chinese names. So NIO, again, I traded NIO a bunch today, and I got that trade review video to check out. Volume, significant, still in a daily downtrend, anything under 20.55, still over 10%, right about 10% to the upside. Bulls that missed this move on Chinese names that want exposure, and I was close. I was real close to getting a Baba IRA long-term no-touch position, but didn't pull the trigger, and that's all right. But they're waiting for daily higher lows at this point. I want a gap up tomorrow. Give me a gap up on these Chinese names, and I'm scouting a bearish entry on the morning. So I just know, again, I'm laying out the trade. If that trade presents itself, I'm going to take it. If it doesn't, then I won't. But I know what I want to see. And if the trade comes to me, I will take it. Bulls are waiting for a daily higher low. Aggressive bears are hoping for a gap up open. All right, it's a lot going on. So the big question from here is, how long can bulls maintain hourly uptrends before we lose them into daily consolidation? Every green day that we see from here increases probabilities that our bottom is hit for the foreseeable future. But again, I'm on 35%, and I'm positioning for 35% that our bottom's in. Nah, I'm more than 35%. If I'm being real, I don't know what I'm at. We'll see. Preparing for being wrong. Positioned to be right, prepared to be wrong. Do good things. See you tomorrow.